you've seen the news today, we've launched our new product for first home buyers, Launchpad, which is going to help first home buyers get into market with as little as 5% deposit, which is awesome. So for a number of you, particularly with good incomes, if you didn't meet the Kiama Aura criteria, your income was too high or the house price was too high, you really didn't have an option out there except for mum and dad. This changes the game. Basically, you'll be able to do it on your own as long as you've got a 5% safe deposit. There's a few other cool quirks to this product. The first one is that we're doing owner-occupied apartments with a 10% deposit. But look, that's something that our trading banks just don't do. So that's cool, get you into the apartment market. So how does it work? It's made up of 2 loans. We do 80% of the lending, or the first 80% of the loan, we do on interest only. So you only have to pay interest on that bit. And that's at a nice low interest rate of 2.99%, or it can be anywhere between 2.99 and about 3.4, depending on how long you fix it for. Then the top of the loan, the other 15%, which we call the equity loan, which is really making up the remainder of your 20% deposit, however much that might be. That amortizes over 5 years, so you're paying that part of your loan off a lot faster, which is good. It gets equity into the property. That loan's at 9.95. That gives an all-up blended mortgage rate of 4.09 when you first draw it down, but obviously you're paying the more expensive part of the loan off first, so you build equity into it really, really fast. So Launchpad will appeal to first home buyers that have good income. It's pretty much going to be a requirement. We do force you to pay off that second part of the mortgage fast, i.e. over 5 years, which means that your repayments will be a bit higher than a normal mortgage. That's not a cost, it's really forced savings. But it does mean that you need to have good income relative to the amount that you're borrowing. As a proxy, you certainly wouldn't be over 5 times your gross annual income in terms of how much you can borrow. In terms of other criteria, you have to be a permanent resident and it has to be your first home, or it just has to be your only home. So we will take people that have owned property before and are maybe struggling to get back into the market, i.e. you might have been divorced, or you might have had something go wrong in your life and you've sold a property and now you're trying to get back in. That's cool, we kind of see as a first home buyer. Apartments will do up to 90%. The 5% deposit has to be saved. That can be either through KiwiSaver or Genuine Savings. We won't take a gift as part of that 5% deposit. In terms of employment, the product is focused on those of you that earn PAYE income. It's just lower risk for us when we're dealing with such small deposits. So if you own your own business, are self-employed, look, it's just not going to work for you. But talk to us because we have other product options for business owners. So in terms of where you're buying, so I said up to 90% for apartments, terrace townhouses will do to 95%, and obviously standalone houses to 95%. At 95%, we're looking at metro locations, so areas with well built up populations, pretty much think cities. It's certainly not a product that will be available for lifestyle properties. But again, if you're looking at other sorts of properties, have a chat to us. Certainly can't do them at 95%, but there may be options around 80, 85, or possibly even 90% for properties like that, just not this product. So if you think you meet the criteria, jump onto the Launchpad page, which you'll find under Squirrel Loans. Have a look through there. Everything that you need to know is on that page, and you can apply online from there.